Welcome to This Week in Money. I'm Jim Goddard. Today, Bob Hoye, Chief Investment Strategist at chartsandmarkets.com, runs down the action on the major markets. Bonds were a little soft and some sectors failed to hit new highs. Ed Steer, founder of EdSteerGoldandSilver.com, talks about gold topping $1,900 and digs deep into the gold and silver markets. Can silver catch up to gold's rising numbers, and is there enough real gold and silver to meet demand? Noted West Vancouver realtor Allan Angell examines what's happening in the upper end of the real estate market. Is the market starting to pick up, and will the bank give you the money to buy? Plus, at the end of the show, we'll have a company showcase update from American Manganese President Larry Reaugh. We'll talk to Bob Hoye right after this.
AMY.V Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon, trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, AMY.V's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at AMYVresources.com.
Welcome to This Week in Money, the source for market opinions. Here is Jim Goddard.
My guest is market historian Bob Hoye. He's the chief investment strategist for chartsandmarkets.com. Welcome to the show, Bob.
Yeah, Jim, good to be with you on this wrap.
Bob, what was happening on the big markets this week?
Well, highs were being made. And at the same time, lows are being made on the U.S. dollar. You know, it's that recipe. And you've also had bonds a little soft. We had the corporate bonds. We had a strong interest in those until a week or so ago when we had a upside exhaustion in those. So that bond rally may be the best. So on our work, back in February, March, once the market broke, we were watching, because it was pretty heavy-duty liquidation, and so we looked at previous periods of heavy liquidation, usually ran about 2 months. So we counted it out and thought maybe the end of March would be it, and then I think it was March 19th, did a special piece saying the bottom soon kind of thing, and then for the rally, you'd look for rally up until around mid-year, you know, that seasonal stuff where it can be favorable for base metals, favorable for crude oil, credit spreads would be helpful, that sort of thing, which has come in, and but on the, like some of the high techs, the huge 5 stocks have been fabulous action, you know. The Tesla, I think it's one of the greatest promotions in history, and so the speculators have been having some pretty good sunshine in fewer and fewer stocks, which you often see towards the end of a strong move, that the broad market is just not quite keeping up. So where the NASDAQ and some favorite stocks have made new highs, the broad market, like the New York Stock Exchange Composite Index, has not. So, and on the have-not side, you've had the broker-dealers not making it to new highs. You had the bank stocks not making it to new highs. You had the transports not making it to new highs. So, a few weeks ago, I was looking at it, Jim, and there's about 3 different moving averages, like the 50, the 200, and then the 20-week EMA. They were a number of the important things, like the S&P and things, were trading close to that, and it was sort of providing support. But let's take a look at the seasonal forces. You can often have a high in the middle of the year, and you can often have a low in the fall. So we look to that, and yeah, there's that's possible. What you need, like when we made the call in March for a rally, it was from an extremely oversold technical condition. So then when you look for the next probable high around mid-year, then you look for overbought technical condition, which we have been getting. And particularly, as I said, on some of these favorite, somebody's called them the Giant 5 stocks. So it's been good action at about the right time. And so what we now focus on is that the sunshine came in at about the right time and is in some sectors shining very brilliantly. And then our notion was that the sunshine could be replaced by twilight in August. Pardon me for the alliteration here, but August for twilight. And then if we look at seasonal forces with dismal forces coming into play later in the year, and that is you can often have an important low for lumber in October. You can have a low for copper in November. You can have a low for crude oil out in January. So these then, heading down, they were supportive on the way up recently. So these then become a problem. So I think that we've enjoyed a very good rally at the right time, and we'll watch for transition, a few little failures on certain key items in August, and get prepared for perhaps some dismal action into late in the year.
How are crude oil and energy stocks doing?
Well, they've been okay. Crude itself rallied up to the 40 level, and how do you explain what it was in March when it was at minus 40? But that was an absurdity with the contract. I think the chart I've got for crude oil showed the low at about $6.50 or $7, and it's up into the 40s. There's a lot of the stuff around, although the plunge down to absurd levels, of course, makes a whole lot of production unprofitable. And then you had the remnant of the old and dreadful OPEC oil cartel trying to work amongst themselves to jack up prices. And this is an absurdity as well, because they slow down production rates, hoping to force the price up. But when they're not selling something, they're not when they're pushing prices down, pushing down production rates, hoping to raise the price, they're not making any money out of it. So it's best not to try and fiddle with prices, but there's still enough of a remnant of that cartel to think that they can be, at least temporarily successful. But the point is that it was also oversold, that it was going to rally anyways, but then they sort of get together in committee-like forum and think that they're pushing the price up. But I would think that somewhere, now the seasonals on crude oil are really after September, it can head down on that seasonal move down to January. And who cares what it does in the meantime? The point is to look at it and see what it's doing. The other one that's been very good have been on the precious metals, with really good rallies in silver and gold, which of course is against the decline down in the U.S. dollar. And the world is really wired up about how reckless the Federal Reserve is being, and with huge issuance of currency against the crisis. And they then hypothesize that this is going to really drive the U.S. dollar down and things up. But they don't seem to understand that every other central bank is being just as reckless and just as forceful in trying to inflate credit in their systems and depreciate their currencies. So if the U.S. was the only central bank that was doing it, then that formula of bringing back soaring inflation might work. But you have to look and realize that on a great financial mania, part of it, although the stock market gets all of the noise, there's huge action in the credit markets and huge issuance of bonds, and then all of those bonds have to be serviced, and if a majority of the issues are underwritten in New York, and due and payable in U.S. dollars, it represents a huge short position of dollars. So one of the things that happens after a post-bubble, or after a bubble, and I've been calling it the post-bubble contraction, is that the senior currency becomes, well, chronically strong against most other currencies and most other commodities for most of the time. So what we see here now is that this has been a very sharp rally, and if you look at the broad market, like the New York Stock Exchange comp, not to new highs, and that quite likely the high in January was enough to complete the bubble, and then this rally out of extremely oversold conditions is a test of the highs. I don't think like the comp will get two new highs, and then it rolls over after August. So in which case you would then be into a cyclical bear market. One of the things that is indicative of a great financial bubble has been that gold's real price, that's where you take it in the senior currency terms and deflate it by the CPI, and on great bubbles in the past, it has declined down to an important low, which it did, and then gold's real price has recovered, which it has. It's in a strong bull market. And then with this, the gold shares in a great financial bubble underperform. And as you know, the gold stocks completed a mania in 2011 and then suffered a severe bear market right down to 2018. So, but since then, you've had gold's real price go up, and you've had the gold stocks really outperforming a senior index like the S&P. So that gold stocks are outperforming is indicative of a post-bubble contraction. And then overall, you've had, until the last month or so, weakness in base metals, which is an indication of a post-bubble contraction. So, Jim, the financial markets are particularly interesting, and they've been devastated by the Wuhan flu virus, which in all of history that I've watched, you've never had governments deliberately shut down an economy like that before, never. And that is part of the political games that are going on out there. But underneath it, there's been a turn from a credit expansion with rising asset prices for stocks and bonds, and it's been a turn to a credit contraction with, at times, weakness in stocks and bonds. So if you look at the credit market, it's turning to a contraction, which makes sense because you've had such a great bubble. But if you kind of have to look underneath all of the noise about the coronavirus and just strictly look at the credit markets and the stock markets and commodity markets and conclude that we're in probably a cyclical contraction. The National Bureau of Economic Research, the NBER, which is the official, semi-official body that decides when the U.S. economy is in recession, and it said the economy peaked in February and is in a recession. So that's now the 19th recession since the Federal Reserve was started in 1914, and it was charged, and it was believed to have the ability to prevent recessions. And here we are, recession number 19. So the old theory about central banking has been disproven yet again. So it's time for folks to be careful. There's been a very good rally out of what was apparent disaster, but I think it's starting to run out of energy here in the next few weeks.
Bob, thank you so much for being on This Week in Money.
Jim, good to be with you, and at any time, glad to be with you.
My guest has been market historian Bob Hoye. He's the chief investment strategist for chartsandmarkets.com. Coming up, Ed Steer next on This Week in Money.
Always consult your investment professional before making any investment decision.
Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMY.V, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back. My guest is Ed Steer, founder of EdSteerGoldandSilver.com. He's also a director of GATA, the Gold Antitrust Action Committee. He's speaking to us from beautiful Merritt, British Columbia. Welcome back to the show, Ed.
Oh, thanks for having me on, Jim. Good afternoon to you, or good morning to all your listeners as well.
Gold closed just a smidge above $1,900 an ounce U.S. What are you seeing happening with gold going ahead?
Well, certainly a $1,900 print is psychologically bullish to everybody. I mean, I look at the number, and of course my eyes pop wide open, and I'm sure it happens to you and to everybody else too, that we finally got above and closed above that number. I see they didn't let silver close above 23, but that's only a matter of time. So, you know, the psychology of the market is bullish, and we're going to see new highs, you know, I mean, with the odd backstep in here and new highs. But they are definitely coming, and in very short order, in my opinion.
Are more people paying attention to precious metals who, say, for the past few years didn't even notice it?
Oh, there's no question about it. I mean, the interest on an institutional level, the big money players, the people behind the scenes, or the deep state, if you want to call them that, they all can see that the U.S. dollar and the financial system of the world is pretty much breathing its last. And they've been piling into the ETFs and mutual funds and depositories in both gold and silver for the last 3 or 4 months. You know, there's more activity in the COMEX futures market. There's more activity in the equities. And there was a story on Zero Hedge yesterday or the day before about the Robinhood type traders are now in this market. And once they're firmly ensconced, they're going to light a fire under this market like you've never seen before. And yes, it's just getting started, but the best is yet to come.
What are you seeing in the latest commitment of traders' reports for gold and silver?
Well, the COT report, which just came in exactly as Ted Butler, silver analyst Ted Butler, said it was going to and hoped for. We had big increases in the price of gold and silver during the last reporting week, which ended at the COMEX close on Tuesday. And with those big increases in prices in gold and silver, there was very little short selling by the big banks, including J.P. Morgan. And so we're seeing a rally without them going in massively short like we have before, which is extremely bullish. That's happened. I've already looked at the numbers and typed them up for my column tomorrow. And they were the same in both gold and silver. They were just not there. No, they weren't to be seen anywhere, which is wildly bullish. Because we've normally, when we see a big run up, the banks and the big commercial traders are going short against everybody in sight. And that hasn't happened this reporting week and for quite a while now. So there's no question the COT report is wildly bullish in the extreme.
If gold trades at new highs, is it likely to ignite a longer-term bull market?
Well, the bull market is already underway. It's just a matter of how high it's going to go and how long it's going to take to get there. But everything, the economic, financial, monetary, the dollar index, people's attitudes and belief structures are all aligned for the precious metals now. And these new highs are just what they would call jacks for openers. They're going to go much higher.
Silver is trading at less than 50% of its highs. Do you think silver is being left behind or is likely to play catch up and move towards its previous highs near $50?
Silver is the most undervalued commodity on planet Earth. It has been that way for a long, long time. as you and most of your listeners are aware, the prices of silver and gold have been managed through almost all of recorded history. And silver will not only blow through $50, I expect that at some point in the not-too-distant future that silver will be sporting a 3-digit closing price somewhere well above $100 before this is all over. And yes, it's been left behind, but when it goes, it's going to blow past gold like it wasn't even there.
Are the big shorts still short on silver?
They're short on silver and they're short on gold. The big 8 traders are massively short both precious metals, and they're trapped on the short side. They would have to see a gold price of around $1,300 and a silver price of around $9 to be able to get out whole. And they are feeling the pain. They've been covering some shorts for enormous losses. They've been delivering both gold and silver into their short positions, and Ted Butler says that they've even been buying shares in all the mutual funds like SLV and the other big mutual funds and ETFs to offset their short position. Yes, they're massively short, desperately trying to get out. But even if they only get partially out, they're going to be one of the big drivers going forward, if not covering their short positions, and certainly going long silver in the other markets, silver and gold in the other markets. There's no question they're still short.
We'll have more with Ed Steer when This Week in Money returns.
Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Allan, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back. We're speaking with Ed Steer. Ed, is there still a physical shortage of silver?
There's a physical shortage of silver, and there's a physical shortage of all the precious metals. Go to any precious metals website that sells bullion for a living, and I don't care which website it is, and there's nothing for sale. You can't get silver maple leafs or silver eagles or 10-ounce bars or 1-ounce rounds. There's just absolutely nothing for sale. And what is for sale is selling for huge premiums. That situation is not going to go away, and it's going to get infinitely worse going forward.
With that shortage, is it really surprising that silver is at this low price?
Oh, there's no question about that. I mean, the dichotomy between what's going on in the physical market and what's going on in the paper market and the COMEX, which is what controls price, is absolutely light years apart. These two markets are just so far apart. You're going to need much higher silver prices to resolve that, but that will just make the physical shortage even worse. So, if you haven't got your silver by now, you're going to be out of luck further down the road.
Is this likely a summer rally in gold and silver stocks, or a longer bull market?
Oh, there's no question about it. You can throw all these seasonal things out the window now. This bull market in gold and silver is on fire. And there's going to be, if there is a pullback in summer, say in this month sometime or in August, it's going to be a COMEX generated rally where the shorts are trying to get out of their short positions a little more. But it's going to be very technical in nature, and any dips in this market should be bought, and I'll be aggressively buying more precious metal shares if and when that does happen. So the summer rally is on, and it's going to go into the fall and winter rally. It's going to be a continuing thing with the odd setback, of course, but this rally is on for good now. Are
the junior miners still a good bargain?
Yes, everything's a good bargain out there. I don't care whether it's junior, intermediate, or senior. I can tell you right now that the gold stocks are going to be selling for 5, 10, 15 times what they are now by this time next year. So you can buy anything with total confidence knowing that it's going to do well for you. I look at my own portfolio, And as my readers know, I'm all in. Every single penny and dime I own is in the precious metals market, either in the physical metal or in stocks. And they're just on fire right now. A lot of the juniors are up like 100% or 200% in the last 3 or 4 months, and it's just been absolutely amazing to watch, and that will continue and get even more incredible as more and more people jump into the market.
Is the U.S. dollar still playing a big role in the prices of gold and silver?
Well, it is to a certain extent, but, when you look at the currencies in the stock markets and interest rates and the precious metals, there are no free markets in anything. I don't think the currencies are trading freely right now. The prices of precious metals are controlled in the COMEX futures market. The dollar index should be playing a larger role than it is right now. Certainly, there's no question about it. We're seeing the dollar index fall, but the precious metals are not going up as fast as they should be. And that's because they're being managed. So, if we're trading in a free and fair market, then of course that would be reflected in the gold price versus vis-a-vis the U.S. dollar. But that's not happening. But there's no question about it. As the U.S. dollar continues to fall, the price of precious metals in U.S. dollars will continue to rise.
What's happening in physical versus paper gold and silver?
Well, I sort of alluded to that before, and that's the fact that what's going on in the physical market, I don't care what you want to buy. You want to go out there and you want to buy a monster box of anything, 1,000 of these or 500 ounces of that, or even a couple of rolls of silver maple leafs or 10 10-ounce bars. Good luck to you, okay? Even the U.S. Mint right now is not producing anywhere near their capacity, and I don't know whether it's they can't get the paper or not, or the physical or not, but the difference between the retail wholesale market of getting silver and gold right now and what's happening in the paper market and the COMEX, like I said, it's just light years apart, and sooner or later that will resolve itself in much higher prices.
Now, I've seen TV ads saying we're offering you these silver coins at an incredible price. Should you be really wary of offers like that?
If it sounds too good to be true, it obviously is, because there's nobody out there that's not selling an ounce of silver, an ounce of gold right now for very big premiums. And so I would really, really question that. And if they are promising it, what kind of, are they promising instant delivery? I would be worried of anything like that, because it sounds like a get-rich scam for whoever's running it.
How are the Hoye and XAU indexes looking?
Well, they're all going up, but as everybody that tracks them knows, that they're not responding anywhere near as positively as they should be. They're lagging the metals by huge amounts. This has been going on for a while now. We're at new record highs in the price of gold, and we're nowhere near the new record highs in the Hoye. None whatsoever. And that's been a mystery to a lot of people. It's been a mystery to me. And as far as I'm concerned, they should be at least 2 or 3 times higher than they are now. They're going to get there, but like I said, it's a total mystery to me why they're not doing better, because they should be doing better.
How's the gold-silver ratio looking?
Well, I just computed it before we went on air, and it based on the spot closes of gold and silver today, it was 83.5 to 1, and it's dropped precipitously this week. It was up in the mid-90s, and now it's down to 83.5, but it was up, 125 or 128 2 months ago, which was absolutely ludicrous. And we're never going to see that number again in our lifetime. So enjoy looking at it on the chart, because we're going fantastically lower from here. And like I said before, while we were doing this interview, silver comes out of the ground at 9 ounces of silver to every ounce of gold. Is a 9 to 1 gold silver ratio practical? I don't know, but 20 to 1 would be, doable, and from 80 to 1, that's over 4 times the price that silver is right now, and at, $23 you're talking, 23 times 4 is $92. And I can tell you right now, I'm expecting it to be in excess of $100 at some point, so we're going to see the ratio go down a huge amount from here, because, like I said, this bull market is really going to go. and the silver price is just going to explode, and that's what's going to drive this gold-silver ratio lower.
Are you bullish on gold and silver short-term and long-term?
I was bullish on it short-term, medium-term, and long-term for the last 15 years, and finally it looks like our time in the sun has come. And I'm very happy to be all in. I've been all in, like I said, for the last 10 years, and for us long-suffering bulls and all your listeners out there, it looks like our time has come, and this can't end soon enough. So we're all going to be all better off now this time next year, and by then, of course, the bull market will be at its peak sometime, and I'll be looking for the exit doors as none of us are getting any younger.
Ed, thank you so much for being on the show. And by the way, how can people find out more about your newsletter?
Oh, sure. It's called Ed Steer's Gold and Silver Digest. I publish it 5 days a week, Tuesday through Saturday. You can go to my website, edsteergoldsilver.com, I think it is, or just Google my name, Ed Steer, S-T-E-E-R. Go to my website. There's a sample column in there. You can click on that, and you can read what I have to offer. And if you're interested, it costs US $100 per year, which is about 134 Canadian right now. And you get about 250 issues per year for that amount of money.
My guest has been Ed Steer, founder of edsteergoldandsilver.com. He was speaking to us from Merritt, British Columbia. Coming up, Allan Mark Angell, next on This Week in Money.
Cypress Development Corp. is developing a world-class lithium resource in the heart of Clayton Valley, Nevada. The size of the resource makes the Clayton Valley project a premier asset with the potential to impact the future of lithium supply. Cypress Development Corp. trades on the TSX Venture Exchange, symbol CYP, the OTCQB, symbol CYDVF, and on Frankfurt, symbol C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back. My guest is Allan Mark Angell, one of the top realtors in Canada. He's sold more than 4,000 properties. I guess there's a little commission involved there. He's located in West Vancouver, BC, Canada, and online at the angellgroup.com. That's spelled ANGELL group.com. Allan, welcome back to This Week in Money.
I thank you, Connie. I'm excited to be here.
How have the lockdowns and the sudden increase in unemployment affected the real estate market for the first half of the year?
What I would like to do, Jim, just take half a minute to give kind of an introduction, then I'll answer that for you. I want to give people a summary of the last 3 or 4 years of what happened. In May of 16, the market ended. The market had been great up to that point. The market just stopped at that stage, but most people, the board included, the government, they didn't know it had. So it wasn't until August 17 that the taxes arrived and the prices started to drop. They dropped about a third in value for all homeowners, lost about a third of their value. And then I predicted in January last year the market would bottom out in the fall, and it did. So it looked good. Sales picked up at that time, but by March of this year, we were almost at an average year. Then all of a sudden the virus hit, and month of April was the worst April of all time. So we're now into the virus market. And to be honest with you, I'm quite surprised. The stats are down, but the value of the homes haven't dropped all that much. I mean, houses, as I said, month of April, where the sales, they just dropped a huge amount, but value since that time, I mean, they've gone down, but not like you might expect. So in April, it was terrible. It picked up, but still, it probably means this year, 2018 was the worst year in our history since I've been a realtor. My stats go back to 1984. I started selling in the 70s. 2019 was the second worst year. So, you know, we're now comparing it to the last 2 years. Now, it's interesting because you see by March of this year, I laughed. They said, "Oh, the market's up so much; it's up to 35%, 50% over the same month of 2019." But as I said, I'm looking at Vancouver West right now. In March, they had 204 sales. March of 2019, they had 159. So that's a huge increase. And you saw Reaugh, they put out those numbers. What they didn't say that the average March is 458 sales. So the 204 was less than half of the average. So really, all the plus that you see in the paper have been compared to the worst 2 years we've ever had. So the lockdown has affected us, but sales are down and going down, but prices haven't dropped off that much. They dropped so much in the last 2 years that it probably didn't, I think that's why they didn't go down 30% or something from here. So it has affected us, but we're still selling houses. Month of April was terrible. It picked up in March and April. I mean, in May and June. So the signs aren't all that bad.
Do you have the sales numbers for the first half of the year, and how do they compare to previous years?
Well, this is the interesting thing. Yes, I'll give you an example. I'm going to give you share a few stats that the realtors, the average realtors haven't got. The Lower Mainland, the Greater Vancouver, the all-time high was 22,000 plus sales. The worst year we ever had was 2018, 7,522. So from 22,000 down to 7,500. The average over that association now is about 14,000 sales. So basically last year was half of the average. As of the end of June, we are 142 sales above the worst year. So basically, Greater Vancouver is just about the same. Vancouver West Side, the same thing. They're almost the same as the worst. And North Vancouver, Richmond, other areas like that, they're slightly behind. So right now, we have a chance that 2020 could be the worst year we ever had, because it was slightly ahead in March. Now they're just about all even. So if the virus continues as it has, my guess is that 2020 could be the worst year in total sales of all time.
Are people now getting more house for their money?
Well, as I said, I mean, the bad market ended in the fall of last year, so they were getting more then. No, the market's only dropped since the virus. It's dropped. I mean, if you had a $2 million house, now it's worth $1,851,900. So, I mean, it's almost the same. It hasn't changed. The values haven't changed a lot at all.
What's the listings to sales ratio for the various categories of homes in West Vancouver?
Well, it's interesting. I think the most important thing a realtor should do when he's about to put a house on the market is sit there with the seller and say, okay, what price range are you in? Like if you're in say you're in the $2 million, $3 million dollar range in the Greater Vancouver area. Right now in that range, 2 to 3, there's 957 houses. We're selling 96 a month. So you basically have a 10% chance to sell. And every price, that hasn't changed much over the last 6 or 7 months. But that's an important graph for a realtor to do it. And how many do it? I think it's only a few. Because if I'm putting my house on the market, I want to know if my house is a 4 to 5 million, how many houses in my area are there for sale, and how many being sold each month. So that's a very important graph. At 4 to 5 million, you have a 5% chance to sell each month. That's it. So if you don't price a house properly, it won't sell.
What's causing some high-end homes in West Vancouver to be listed for sale at 1.5 to 2 times their 2020 assessed value?
Well, it's interesting that the BC assessment, I check every house that goes through this assessment and how it changes. Our government said we're going to reduce the price of houses, and they certainly accomplished that. As I said, every homeowner's lost at least a third of their value. So that has been accomplished. What they haven't told you is that the high end hasn't been affected anywhere near as much. If you look at the assessments in 2018, 72% of the houses sold below tax assessment. 2019, 74%. But if you break it down into the high end, low end, the median end, the low end's always affected more. So yes, they lowered the prices of houses, but it affected the low end market because there's more buyers in that market. They're the people that have to sell because they're getting a new job, they're changing schools, whatever. The high end, the very wealthy, don't care. They just put their house on a price. If they get it, if it sells, great. So many of them, now most of them this year, the top 20 sales, only 2 have sold below tax assessment. So when you look at the high end, you got 18 out of 20 selling above assessment, and some of them are 3 or 4 million are selling at 3 or 4 million above assessment. The high end hasn't been hit that badly in the assessment, so they're selling at a higher price. So the rich, the wealthy, haven't been hit as much as the lower priced homes.
So it really depends on the category of home, whether it's selling above or below the tax assessment.
Yeah, but it's interesting, as I said, because 2017 and 18, there were 70% were selling below, and now 68% this year are selling above assessment. So the assessments have come down. So it's interesting. It's nice to study assessment because now I go into an area when last year I said, listen, in your area, 79% sold below assessment, so here's what you can expect. Now I can go in and say, okay, now they're selling above assessment. So it's the way it used to be. In the old days, we always sold above tax assessment. We didn't really care about tax assessment until the Chinese arrived, and their philosophy is that, well, if the government says your home is worth this, then why am I paying more? And so it's interesting how the assessment has changed. The value, the worth of the assessment is now very, very important. Because I had a house just for example, I put on for $5,900. Brand new house. The assessment's only $4,400. So the first offer I got was $4,450. And they said, well, that's what the government said it's worth. So I said to my people, I've told you to get your assessments reassessed because the house has just been finished. So they did get them reassessed. They went up to $5,600. So all of a sudden now, I actually sold it over the asking price. So that's how important assessments are today. In the old days, we just ignored them. We didn't care.
Are West Vancouver waterfront properties selling?
They're not selling. There's only 2 sold. Now, apparently there's two off the market that sold. You know, the old days we used to list on Mothball exclusively, so you had to go. But now there's 2 reported sales from Horseshoe Bay to the Ambleside area. The average waterfront sales since the 80s is 18, and this year we have sold 2. But I've been told there's 2 that were sold privately, but you know, we don't know for sure if that's true or not true. So no, they're not selling as well as they should. The interesting, if you're past Horseshoe Bay to Lions Bay, the market's about the same. It's stronger out there than it is in close.
We'll have more with Allan Mark Angell when This Week in Money returns.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com. This Week in Money is archived online at TalkDigitalNetwork.com.
Welcome back. We're speaking with Allan Mark Angell. Allan, are high-end West Vancouver properties selling?
Well, it's a huge change. It depends what you call high end, but I have a chart here for like sales over 5 million, and how many we sell every year over 5. Now, if I go back to 215, we sold 123 houses in West Van over 5. 216, 145. 217, 92. Right now, this year, 220, we're at 17. So you can see how far we're off from 216, 145 in the year. So half that is 70 something. So no, the high end market has been affected. As I said, they're not selling because they've all dropped in price. But the buyers, the owners are saying, you know what, I'm going to wait until the market changes. So I'm not going to sell my $8 million house for 5. So they're not selling at this stage. As I said, 17 for half a year. It's insane.
What does the West Vancouver real estate market tell you about foreign buying and the economy?
Well, another chart that I do sales over 10 million for the Lower Mainland. I want to see how many houses sell over 10. Now, again, because it isn't the people that that have been here for years that are buying them. It's only a few of those. It's the new people in the country who are paying over 10 million for it. Back in 2016, we had the Lower Mainland. We had over 10. We had 49 sales. 2017, 41. 2018, 19. This year, we're at 5. So that tells you right there, because of the foreign buyers tax. Now, one of the ocean funds apparently just sold. I haven't got the because it's a private deal, but apparently that was a foreign buyer, and he paid $6 million for the foreign buyers tax. Now, how many people can buy a house and pay an extra $6 million for that? So yes, it's affecting us in a huge way because the Chinese and Iranians who are here that are buying these expensive homes, they live here, they've been here a long time, and they're like everybody else, but they're still buying them. But the ones are not coming into the country because of the taxes. So it has changed our market. As I said, my company, Angell Malcolm Hasman is my partner. We've kind of always specialized in high-end homes, but I'm working harder now than I've ever worked because there hasn't been the sales. I've been showing houses on Vancouver Island, so Quetelam. I go all over the place now just to do a deal because I love real estate is my life, and I love doing it. So I'm all over showing places, and now I'm doing low-end apartments, $600,000. I just sold an apartment downtown in Reaugh for $600,000. I'm all over the place because I like to work, and that's what I do. I have to work because I have nothing else to do except on my stats. I golf, and that's it. So yes, it is affecting the but it's affecting the high end.
Is the economic turmoil in China having an effect on foreign owners of West Vancouver real estate?
Well, yes, it is. But I think it's the taxes. To be honest, it's the taxes because they're having trouble getting their money out of the country and all. I have a deal right now which they got their funds here, but then the government has to hold it and check it out for money laundering and all the rest, and that could take a month or 2 months. So everything's on hold. So it is affecting what is going on here, but really it's the more the government regulations here that are affecting what's going on in our market.
Are deferred mortgage payments holding back an increase in inventory?
Well, I've actually been surprised. The inventory is low. It isn't close to an all-time low, but it's probably about 10 to 20% below the average. But that was in April. But now the inventory is climbing at a rapid rate. But I think what it's actually helped us. Having these deferred mortgage payments have actually helped us because we just people don't have to pay their mortgages for 6 months. So that enables us to survive and get through the bad months. So I don't think it may be holding up a bit, but no, I don't think deferred payments have hurt us. It's helped us. I think once the vaccine's in the inventory, what concerns me is that once the vaccine's there, I think the inventory will just climb at such a rapid rate. It'll be staggering.
Are the smart people deferring their mortgage payment and taking their payment and putting it into savings right now, if they don't have to defer it for job or other reasons?
Well, that is good if you don't, if you're still, your job's still there, you're still making the money, you're still, in our business, for example, let's be honest, when the virus hit in April, I mean, how many people don't want their house showing? So our market was hit at a huge rate because people don't want people in their home. They won't put their home on. They won't put their home on the market. So, it helps and hurts us.
In the lower mainland, real estate prices were hit hard due to high interest rates back in 81, 82. Could the lockdown recession of 2020 cause a similar drop in real estate prices?
No, I don't believe there is a chance of that, because 1981, I actually became the top realtor in Canada in that year, so that was a time ago. But the market, we had more sales in 81 than we're having now, because the interest rates were 18, 19, 20%. So even the high end had to sell. So we had more sales then. So because the interest rates are so low now, the people can hold on to their houses, and they're going to wait until the market increases a bit. So I don't think I think the drop is almost, it ended the fall of last year. There's a slight more drop now, but no, I don't think it'll be as bad as 81 and 82.
Are banks making it tougher to get mortgages?
Yeah, I lost a deal the other day. It's very tough. It's very tough to get a mortgage now. The banks were like the government put the taxes in. The bank changed the rules. If the government and the banks knew with 260 that the market was over then, not a year and a half after it was over, but that time was too late, and everybody overreacts. But yes, it's still hurting a lot, and it's harder in our area because houses are more expensive, so the banks want a lot more down. So yes, it's much tougher to get a mortgage now.
Are you seeing foreclosures in West Vancouver?
We had a lot last year, but I think this deferred mortgage, 6 months deferred, has saved a lot of people. Because if your house was about to go into foreclosure, now you can defer your mortgage payments. That's really helped us. That saved a lot of it, because now we're not even talking about foreclosures. We're at the end in fall last year. We were talking about foreclosures all the time. So now we're not, because the people that held on, if they got their mortgage deferred, they're safe for 6 months. So it slowed them down.
If people price their property to the market today, are they likely to get a sale?
If it's priced right, yeah. I have about 16, 17 clients waiting to put their home on the market. I've tried to tell them I'll put it on now, because the virus thing is that people are not out looking for a house unless they have to buy. So it's not like the normal spring. When the springtime comes, everybody's bored. They've been locked up. They want to go and look at houses on Sunday. That isn't happening. So basically, the buyers are real buyers. If you got a buyer out, they're going to be buying a house. So that's a huge. You don't get all the showings that you would normally get, but they are real live buyers. If you price it right. The other concern I truly believe, once we have a vaccine, I think you're going to have an influx of housing on the market, and nobody really pays attention to what is actually happening. They think they know, and I think you'll have such an influx, and everybody will come on at a higher price. So I'm more concerned about the market then, with so many more houses and at higher value. I think we're going to have a harder time getting the prices then than we may today, because the prices haven't changed all that much.
Does BC's economy rely on a strong real estate market?
Yes, for sure it does, because listen, it's a great place to live. But unfortunately, every once in a while, we get a government in there who thinks they're going to slow it down, and I think they know what they're doing. Well, the end result is always the same. They hurt the average Joe more than they do the wealthy. And that's what concerns me. The houses in Caulfield where I live, I mean, you couldn't get a house if it 2.5 was as low as you can get. Now, all of a sudden, these houses that were asking 2 million to 2.1 last year, they went down to 1.4, 1.5. Well, that's a huge drop. Huge drop. A lot just down the street from me that would put the guy paid over 2.4 to buy it, and it's still a lot, just sold for $1,075,000. So we've had that change. We've had that change in the market, and so as I said, so it hasn't changed all that much. So I think it's a great time to buy.
Do you think the BC NDP government has done a decent job of making housing affordable?
No, I'm not a fan of theirs, of course, and because I said most of my clients are on the older side now. They've had their house for a long time, and the house may have gone for $2 million up to $5 million or something, but it's now dropped a third. So as I said, they're staying in their houses. They're not going to sell them. So yes, prices have dropped, but still, prices are still too high for the average person. So they've accomplished their goal. They've cost every homeowner a third of their value. If you're an old ager now, and you think your house was worth $6, now it's worth $4, that's a big change. And now you're too old to get that back. Now, if you're 35, 45, fine, you'll weigh it out. But no, I do not agree, because they have dropped the market for sure. But let's be honest, it's still too tough to get a nice house for the average to fit.
Well, before this whole virus crisis hit, they announced that housing starts were declining rapidly. Are declining housing building rates a serious sign that housing won't become more affordable simply because eventually that leads to a shortage?
Well, see, here's what's happening. You're right. Because the sales in the fall last year, I sold a brand new house. We started over $6 million. Brand new house, $6 million. I had offers in the 5s. I ended up selling that house for $3,300,000. So now all the builders realize all these lots that they bought for $2 million, $3 million, they're not worth that anymore. So building has declined because they can't make a profit. I sold a lot in the British property. The man next door is one of the wealthiest men in Canada, and we sold it for $7 million. Now it's worth $5.2 at the best. But you cannot build anymore because a lot of our developers bought some extra lots to build on, but they're too expensive. So you can't do it. Apartment sales, all these pre-sales. There's been a history here that if you buy a pre-sale on a relatively expensive apartment, but by the time it's built, you're going to make $1 million plus on it. Well, now there's a few developments they're not getting back what they paid for. So why would a developer build all these places now when they can't guarantee you're going to make $500,000, $1 million on it? Because now, like I had one, I just had an offer on it a couple of months ago. Brand new place, great developer. They bought it for $1,079,000 plus the GST. The highest offer I've been offered on it is $900,000. So no. All our development is off, so yes, we're not going to have it because you can't make a profit.
The junior stock markets have been on a big move upwards. Are you seeing any of the profits moving into West Vancouver properties?
No, I haven't. I mean, I don't know where they made their money, but as I said, sales are basically even with an all-time low, so I haven't seen an increase at all.
Are developers still full speed ahead in building condo towers in West Vancouver?
Well, there's a few that are under construction, but they were under construction. They were started when the market was still at a high, so it's very tough. As I said, I feel sorry for them because they're not going to get the price. And all these people have put these large deposits down. Like we have a development over here, which is quite nice, and the nicest development we ever had. A lot of people on the ocean front said, "Okay, good, I can buy a really nice apartment for $6 million, and I'm going to get $12 million for my house. It's a hell of a deal. I'll retire. I'll put $6 million in the bank, and then I'll buy that." But the problem is, their oceanfront sold between 8 and 9. So they lost $3 or $4 million on the oceanfront. And then they had to compete on that apartment. And if it was worth $6 million, it's probably worth $5 million. So it's been a huge loss for these people.
We hear people are who used to buy in the big city, then the suburbs are now selling and moving out to small towns. What are some of the prime small towns people are looking at?
Well, it's interesting because I have a family member that I have a house for sale, and he wanted to move to the island, Vancouver. He wanted an oceanfront over there. So we looked at them, and they're selling. If you list the water, they were in Comox and other areas of the Vancouver Island, and it's a hot market. People, because of the virus, they're buying Vancouver Island, they're buying waterfronts over there. At Comox, you can still get a place $800,000 to $1 million there, but they're selling within like 5 or 6 days of being on the market. The islands, the islands are hot. Bowen Island, Gulf Island, things like that. People are now realizing, if the virus continues, and it may happen again, we better have a safe place to go. So yes, some of the outskirts are selling. The market is great. Prices aren't skyrocketing, but they're being sold, and so that is because of the virus.
If people are planning to sell, should they be listing now?
Yes, I would, as I said, all these people I'd rather have the houses now because I'm certain when the virus is, the vaccine's there, and this surgence of houses come on the market, and they're going to be too high, they're probably going to have a harder time to sell. Now, if you price it right, you should sell the house. I've got a house like right now, I got an off-front. It's been on the market for 2 years. I didn't have it. It was over 2 years on the market. Now, I've had it for a month and a half, and I had 8 or 9 offers on it. So we priced it right, and it has a good chance. I expect that it will be able to be sold. So, yes, if you price, but the problem is your realtor has to know the truth about the market, not what the board stats say, because they said the board counts a sale by what deals were handed in. They could have been done in March, handed in July. They counted a July sale. So you need to know the truth. That's why I have to do my stats every day, 3, 4, 5 hours a day. I check. I do Maple Ridge. I do Tri-Cities. I do them all because I want to see how they're being affected. Is there any difference there than my area here? If there's anybody out there paying attention to my podcast, if you live in Vancouver East or somewhere else and you want to give me a call, I can tell you what your area is doing there as well. Now, they're all close, but some are slightly above last year. Some are slightly below, but it's interesting to see.
Allan, how can people get more information about your real estate organization?
Angell Hasman and Associates is the name of our firm. Allan Angell, Malcolm Hasman is the name of my firm. I'm the stats guy. I've been around so long. The easiest way to contact me, Allan Mark Angell at Gmail. Allan is spelled Allan, Mark Mark, Angell Angell at gmail.com, or the easiest way, just call me on my cell. That's an easy number, 778-888-7474, 888-7474. And as I tell people, real estate is my life. I can talk about it all day long.
Allan, thank you so much for being on This Week in Money.
I thank you kindly, Jim.
My guest has been Allan Mark Angell from West Vancouver, BC. His real estate group, theangellgroup.com, and that's spelled Angell. And that wraps up our show for this week. We'd like to thank our guests, Bob Hoye, Ed Steer, and Allan Mark Angell. And we'd like to thank you for listening. If you have any questions for our guests or the show, you can send them to info@housestreet.com. Now stand by for our company showcase update from American Manganese President and CEO Larry Reaugh. I'm Jim Goddard. We'll be back next week with more This Week in Money.
Comments made on This Week in Money are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at talkdigitalnetwork.com. This Week in Money is a production of Howe Street Media Incorporated. Executive producer is Tom Allan. Welcome to Company Showcase, an advertising feature on HoweStreet.com.
I'm your host, Jim Goddard. I'm speaking with Larry Reaugh, CEO and President of American Manganese. Welcome back to the show, Larry.
Thanks, Jim.
Larry, you just put out a news release. What's in it?
Well, this is a really kind of like a dividend. But before I get into that, let's just say that the pilot plant, we've received one of the parts and it's being installed. We're still awaiting another part, and then we can get back to getting the pilot plant up and start maximizing our output. So just wanted to throw that out there. But the big news is that we have a hell of a good gold market going on. I mean, I looked this morning; it was at 1,900. We haven't seen that in years and years and years, and so that we're not. And AMY was missing out basically on the gold market. It was dwarfed by our holdings in our recyclical process. So we're trying to maximize that for the shareholders, and it's a free gift to the existing shareholders. Just a little bit of a word on gold. It's trading at all-time highs. It's to $1,900. I just want to look at some of the. In the last 30 days, gold has gone up $130, and last 5 years it's gone up $800, and since 2000 it's gone up $1,600. So, are we in a gold bull? I'd have to say yes, we are in a gold bull, and that these companies out there are enjoying the sunshine on that. We could see that, we had some very good assets in gold, and we're not getting any credit for that. So we decided to look at spinning out a separate company, a NewCo, to the existing shareholders, and that's important so that they can share in the gold market. We don't know the ratio that'll be done on yet, but it's I know what I'm favoring, but it's also up to the regulators, so I won't speculate on what the ratio will be. But I want people to look at that as saying, hey, I'm going to be exposed to the recycling process and the evolving EV battery space, and I'll also be, exposed to upticks in the price of gold, and I think gold's probably going to go up to about $2,500 an ounce. I'm getting lots of questions. What about the warrants on the stock? Well, I'm hoping that, before this comes to fruition, because it's going to have to go through the exchange and we're going to have to make applications and get approvals before the NewCo can come out. So I'm hoping that the warrants, some of the warrants can be exercised, or all the warrants can be exercised so they can enjoy a free ride on a gold company. And that's our shareholders. So, to those that are asking the question of whether the warrants are exercisable or whether the warrants will be getting shares, no, they won't. It's unfortunate, but it only goes out to the existing shareholders, and if they exercise their warrants, let's say the stock pops a little, and they want to exercise their warrants to be involved in the NewCo, then I hope that opportunity presents itself. So I'm excited. I'm excited to have a separate company out there under the same management. It's not like we don't have a lot of expertise on our board and people with vast track records, and that there's four people that have everybody but me have degrees in mining engineering or geology, and that are on our board that exists today. And so we won't be looking at changing the management at all. And it's the management or the directors. So everybody, I think, should enjoy. We've had a lot of frustration. We've moved up from 2-cent range, and we're currently trading at 20 cents. But I think that this will give an extra boost, and because you'll have a stock out there that has some good value. Now, when you're applying to list another company, you have to have a property of merit, and I've been involved in listing about 20 companies on the venture exchange, so I know kind of what they look for. And the major thing that most companies have a problem with is getting a property of merit. And I think it'd be hard to say that our iron oxide copper gold property in British Columbia doesn't have the merit, because it's a past producer. And we've included this in the press release, but the Rocher de Boule Victoria mine produced 6,200,000 ounces of 200,000 pounds of copper and 4,500 ounces of gold, and good credits, even in cobalt from the Victoria, and other copper production from Highland Boy and the Cap. So look at what we have. There were separate shipments that were made. This is all back in the late 40s and 50s. And like one high-grade shipment of 23 tons averaged 6.25 ounces of gold per ton. Now that's a nice number. Silver was 8.7 ounces, and copper 7%, cobalt 2.5%. Even molybdenum came in there at 1.15%. So I'm looking forward to having the NewCo out there, and having some good programs over the next few years. And we're going to look at this project in a light that this is this high grade gold and copper and cobalt and all that come off of the system, and we're going to try to locate that heat engine and move that forward. But I think that people should look at this, the shareholders should look at this as some sort of a dividend into a gold stock where they don't have to pay for the shares. And anybody coming into financing, well, of course, will have to pay for their shares. But to say that I'm not excited would be, that'd be a lie, because I'm extremely excited. And I think we've got the right things going. I'm getting lots of queries on, especially about warrants and even options. I'm sorry, those are as they exist today without the warrant or the option being exercised. They won't have the shares to get in their hands to get the issue done. So. What can I say, Jim? This is another era for the company. I've had 50 years of experience in the mining industry, and I've usually had about 3 to 4 companies that I ran at one time, and I'm still extremely excited about what's happening with our recycling and the maximizing the throughput through the pilot plant, which would take us close to a commercial-sized plant for final de-risking. So I think the shareholders got a lot to look forward to in the coming few months, and I'm not sure exactly how long it'll take to put together everything that we need to get the NewCo trading out there. But I can tell you we'll work long hours on getting that done. And, I know everybody in here is excited. I know the directors and advisors are excited. The management is excited. So it's who wouldn't want a window on gold? And this certainly would provide a window and a very good property. that has the merits to move ahead. And we've done enough work in the last few years to identify drill targets up there, so we'll be looking at some sort of a drill program at some time. But it's really, I'm tongue-tied. I mean, I would think that this is an excellent opportunity for our shareholders and an excellent gift. That they can sit back and realize they'll be shareholders. It'll be done on a ratio. It won't be a 1-for-1, but it'll be done on a ratio, and we don't know exactly what that ratio will be. I know what I prefer, but that'll have to be determined down the road when we make applications. So, Jim, that's kind of where we're at today. The news release says a lot in it, describes the properties, and I think that we are basically moving forward and maximizing shareholder opportunities.
Larry, where's American Manganese traded, and how can people get more information about it?
American Manganese is a critical metal company, and obviously it's got very good gold assets, and it's traded on the Venture Exchange under the symbol AMY. It's traded in the U.S. under the symbol AMYZF, and it's traded in Frankfurt under the symbol 2AM. We have a website out there called AmericanManganeseInc.com, where you can find all the information and historical information on all the current information on our recycling and the historical information on the gold assets that we have, gold, copper. Don't forget, copper is running about 7% on this project, so it's exciting. And you can go to AmericanManganeseInc.com. You can phone the office here at 778-574-4444, or you can email me at LREAUGH@AMYMN.com.
Larry, thank you so much for the update.
Thanks, Jim.
I've been speaking with Larry Reaugh, CEO and President of American Manganese. I'm Jim Goddard. Our conversation took place on July 24th.
Comments made on Company Showcase are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at HowStreet.com. Company Showcase is a production of How Street Media Incorporated.